Okay. Hello, Bob. So just had a little bit difficulty getting in tonight, but it's all good now. So how's the sound check? You hear me good? Okay, great. All right, let's begin. Okay, so we're starting off just once again, always in the multi-chart screen, and that it gives us a good perspective of what's happening. So at a quick glance from here, let me just quickly, oops, too much minimize. We can see that H1 has reached a multi-high, a high for the time. It's got the white line joining it. See the channel line, yeah. So possibly the highest, and it's outside the riverbank. Okay, so we can see it's outside the riverbank on the 1 hour, outside the riverbank on the 30 minutes, etc. So when the price goes outside the river, the natural inclination, because it's outside its comfort zone, it will endeavor to come back at least to the center line or even spike through it, okay, because the center line's average, yeah, and we can see from the open where it gapped up, here's our center line. You can see prices come back, spike through it, and hung around that area in a sideways motion, okay, and at 11, 9, 10, 11, 12, 1, 2, 3, yeah, so around 3 o'clock this afternoon, in that area, it was in the buy zone, and moved back to the river. Okay, so now we get more detailed information as to how it did this in our 5-minute. Over there to our left-hand side of the screen, you can see the high of this morning in the 1 hour and how price wanted to come back to the center line of the 1 hour. And you can see the 5-minute river. Okay, so not only did they have a high for the 1 hour, it was a high in the 5. Price came back in a little bit. And you can see the relationship of that diamond in the 5-minute of the price coming back in and then satisfied to reach in the 5-minute that it got to. Okay, there's a question there. Oh, good. Okay. Prices moved back outside the river of both the 5 and the 1 hour. Once again, it's the extreme sell zone. Okay, at this stage it wants to come down, so it wants to come in a sell position in the sell zone of the 5-minute, sell zone of the 1 hour, and you can see from that position came back to this in relation to the 5-minute, at least to the center line, and to the opposite riverbank, and then retrace back up. Oops. And then to the 5-minute upper bank, and then came down below the 1 hour center line, yeah? 46 pips. Okay, so this is a high in the 1 hour. So that means it's looking to go in the 1 hour, it's looking to go fine and go down. okay, to at least the center. So that's why we can see pink shading in window 2, because it's indicated. Let me just minimize it so you can have a better view. Okay, a little bit too minimized. Okay, so here's the high of the 1 hour and the 5 minute. Window 2 goes up 4 time frames up to the 1 hour, so it can reflect that the 1 hour has actually reached a high. So the green shading is stopped, and the pink shading. Okay, so this allows us to have utilized a jumping diamond. Yeah. The explanations on the website, and you can see that not only is the pink shading below 0, as pink shading suggests, implies, and is, will always be below 0. You can see the 2 lines representing the red representing the 15, the yellow representing the 5. They're also below 0. So when that happens, it means we're in a jumping diamond looking for lower. So that means when the diamond alert comes, we can actually use the fulcrum criteria. Yeah. So this diamond here, where price is in the 5 minute, it's given us a mini low and went back up. Okay, would have been a jumping diamond. Okay, we can see criteria is met. Window 3 and 4 have to be pink. Window 2 is pink and has both lines below 0, matching the shading. Okay, so just make it a little bit bigger. Okay, so one of the questions were, do we assess the diamond alert when it's a jumping diamond as we would a vertical line? And the answer is yes, because the criteria is for the entry. So whatever alert that we're using, whether it's one of the vertical timelines or a diamond or a vertical blue line, the same assessment is used to confirm the entry. Okay, so over here we can see that the alert comes on the new candle. Yeah, when it starts getting up, then the new candle, we go back and assess the diamond, and it's the left hand love handle of the diamond, because the diamond marks the candle, just like the vertical blue line marks the candle, the unique candle, just like the time vertical line marks the candle. Okay, so the alerts will always mark the candle. So whether it's a time vertical line, a fulcrum vertical line from the river, now the blue or red ones, or a diamond, when we're assessing it, if it meets criteria, we use the left-hand love handle for our trade management lines. Yep. So let's just go there so that you can get total clarity on it. So I'll mark the diamond, the jumping diamond, yeah. So we can see there's the red and love handle. So just like your fulcrum trade management, you'd mark that. And from the open, you'd go to the channel or 20 pips because it's the 5 minute chart, yeah. So here it says 46. Okay, so that's the greater. So 1 for 1 is 46 down. Okay, so 46 is halfway between this low diamond and that, but that's what our 1 for 1 would look like. You can see that we have an open percentage line there, and we have the 1 hour lower bank, as well as the balance line from the support resistance indicator. Yeah, so all this area are possible targets. We place our trade management line, 1 for 1 there, channel lines where that's going to be our stop level. Okay, so it's 7:15, so it's frozen because it's trying to give an alert. Okay, so that's why now that it's happened. Okay, so into this trade. Now, one of the other lines when you're in the 5 minute is also the opposite riverbank. Okay, and you can see the opposite riverbank's very close. The pink riverbank's very close to the hour time frame center line. Okay, so at that point, to get to the center line of the 1 hour, it's basically 23 pips. Okay, and here's the 1 for 1. Okay, so at this point, as we manage our trade, we know where our minimum target, that if it's going to bounce or momentarily stop to go up and come back down, but this where's one can reach. Yeah, so on the appearance of diamond, or the diamond appearance, and it probably would have come up at the first at that green open percentage line. But that's to have the confidence to manage this trade. We've got our other time frames, such as here you can see in the 15. The price action from the morning went to the opposite riverbank, which is below the 0.382. Yeah. So 5 minutes, generally when there's a trade entry, we'll usually meet 20 plus pips quite easily. Yeah. So once again, it's got you into a trade position where it's looking to go beyond the previous 2 diamonds. So, and it also wants to fulfill what the 1 hour wants to do. Okay, so this area of 20 to 25 pips was going to be easily achieved. The stop level is there to give safety to that trade, to allow it its greatest freedom to move without hitting it, to provide you with a profit. Stop loss is not there to actually to let price hit it. The whole idea is actually a well-positioned stop level gives the freedom for price to move up and down, and then to actually go to profit. Okay, so we put our stop level too close, we don't give it space to breathe and to move. And that's generally where most traders fail, because they're more worried about how much they're going to lose, and they relate a stop level as a loss. And when they think that way, without subconsciously, they try to move it as close as possible. And really, in trading, you need to go and be able to go and see from the market what sort of room you need to go and give it its greatest chance to achieve profit. Okay, so that's where the trade management lines come in, to give us that confidence that our stop level is not going to be hit, and the criteria, and when the criteria is met, that there will be a profit. And we've got our exit strategies in place, and we have the chance to see where it has to hit. It had to hit this area here. Try to get down here, yeah. So and because it had really pretty much in the morning when it did this gap, it was 100 pip gap. Okay, so price basically at the morning had to go and find its feet and recover some of the gap, then reach the bottom there, and then as the European London session opened, it's starting to go and find its feet, and you can see that matching that, we had a nice strong movement up here, and you can see the curve of this river going up, almost like an M21 setup, yeah. So and once again here, okay, because price hasn't breached the early morning high, so the 1 hour will still show pink shading. Yep, in this area here, you can see that the red went up to say there was a retracement, and then when it got a lower, got its little high, then was looking for a low, came back below the line, and from this point where both lines were below zero and went to pink shading, once again we're in jumping diamond territory. So this was a jumping diamond, yeah. And once again, trade management from open price to channel 17 pips. So default 20 pips would be it, and 20 pips is just above the pink center, the pink lower bank, yeah. And once again, price is heading down towards the middle line or the center line of the 1 hour, yeah. So probably going to exceed, get around the 50 plus pips. Okay, so once again, things present, diamonds were extreme diamonds for the 5 minutes, and as well as that is above an extreme of the 1 hour. So price wants for the 5 minute to at least get to the other side of the river. For the 1 hour, wants to get to at least the center line. Okay, so and following those cues, having jumping diamond, then it's one of our secondary alerts. We apply the criteria, the same criteria that we would for a fulcrum vertical line. That criteria, once again, if you're unsure, best to go and use the online assessor because it's been weighed up and programmed to assess it and give you a buy or sell, yes or no trade. Okay, so once again, this was just to clarify how we use our visual alerts and how they mark the unique candle. Okay, so here's the 6 o'clock important timeline. Yeah, we have two of those. We have one at 10 o'clock and one at 6. So once again, when we assess that, we can see it wants to go higher, but price here is in the sell zone. So criteria and every other aspect was met. So we know it actually wants to go higher. It's just our assessor wouldn't let us go into that, okay, because it's heading to the extreme. So although, yes, it can go higher, as it's approaching the top of its path, to go and pick exactly where it's going to stop, it's going to create more chaos and that. So, and we don't really need to go and try and catch the end of a trade because here's the beginning, and you can see it's done a fair bit before it got up there. Okay, so we start chasing the end of a trade. We're always going to be chasing the end of the trade. It's much better to get to the beginning of the trade. Yeah. So once again, just to go and stop you entering in a trade, it might have only got 5 pips and went back. It can go 50 pips and go back. But once again, it places you in a grey area where you have to guess. And we don't need to guess because you can see from this morning, there's plenty of trade opportunities and entries, and that's just the 5 minutes. So why guess when you don't have to? The system's not designed for guessing, it's designed to go and be on your side. Any questions? Okay, so hopefully that clarified what tools you use. Okay, so your same criteria for your vertical lines can be applied to the diamonds. The explanation of what a jumping diamond is actually on the website. Okay, so, and if there's still further clarification, just post a screenshot and ask the question on WhatsApp so that you'll have the answer so you can refer back to it. Okay, so you can see here, price is so very close now to the center of the 1 hour. Yeah. Okay, so once again, it's more than achieved your trade management 1-for-1, and it's giving you signals that it's coming towards a bounce point because we've got a current low diamond with a white line joining it. Okay, so whether in this next candle pushes past and goes back, or at this point it bounces, goes back inside the river and then pushes it back down to get below it. But for us, the trade is closed at this point because it's done what it's supposed to do. It's given us a profit. We've locked away. And to go and put a further sell position on or that, once it's gotten to the extreme of the 5 and it's approaching some of its other support lines, like the 1 hour center line, okay, and this line here, that's the open price of the European session. Okay, so a lot of times the price moves up or down, or may come back and be attracted to bounce off that. Okay, channel line. So these things that may achieve later on this evening, but really at this point we're quite happy because it's gone up below the 5 minute, well below in the extreme, and it's finding a support to bounce off the center line of the 1 hour river. Okay, and we've got our white line. So here we'd follow all the rules. You can see price has already come back in 12 pips. Yeah, so the rules are the rules because it helps you maintain and keep the profit that you expected, and that price will behave against support and resistance lines, and when it gets to the extremes it will revert back to its characteristics. And in this part we're pretty much well versed as to expect. So okay, so looking at our chart, I'll just put this back there. One to two trades, when you have that sort of confidence, a 2.5% return is a conservative to medium risk appetite. Okay, so depending on what your goals are, but to go and create routine and based on a reasonable account size, 1 or 2 trades a week should more than suffice. to create enough profit for the average wage, yeah, in Australia. So, okay, so this is 7:30, and that. So, as we can see, on the 5 minutes, there's no reason for us to even consider going for a buy. We can see the orange lines above and above the pink center line. Okay, that's still that pink here. All it's doing is going to the extreme. It needed to come back inside the river to consolidate, and then it'll move. Okay, so, but it's done all the known things. So, see a chat there. Okay, if we're considering replacing our wage after duly, say, using a smaller account size to consolidate our routine, a $10,000 account, once we've got our routine, and you know, where do you start with 1 or 2,000 and get the time that you prefer to trade and do your 1 or 2 trades, then after 6 to 8 weeks, reviewing the results and your psychological behavior to trading. Okay, so what we do, we need to go and not only train ourselves to be in a routine and to follow the rules, we also, this allows us to just observe how the trade's affecting us as we trade. Okay, the more routine you get, and because we're human, starting with just a smaller account size, make us feel more comfortable. And then the difference between that size account and the bigger one, once you've got the routine, you can slowly increase your lot size to match. I mean, doesn't, even if you had a bigger account, you could still use the lot size you would use for a $1,000 account. Okay, and with that, you can certainly post me and ask me for help you set that up so you can have an appropriate plan to slowly ease and replace some of your income before you go through. So, the whole thing is to consolidate each bit of practice. And practice is, when you're doing a smaller account, it's real, but because you're not replacing your income or anything, it's still a more realistic practice. Yeah, we're practicing a routine, and any professional ballet, that while they're not doing the live performances, they're practicing and practicing. They're practicing their trade. Yeah, applying their knowledge. Same with us. Okay, so there was a question, so let's quickly answer that if I can. Yes, that's right. It's all about creating the habit. And that's something we can do. And the important part is, by now, most of you realize that at the beginning, we all wanted to go and do 10, 20 trades a day because we want to get there so quick. But in reality, what we want is quality and as certain as we can be, yeah? So if we can be more precise, more accurate, and have a great routine, that's what the aim's for. And the aim is that really you don't want to be a slave to the screen. You just want a business transaction that you need to attend to as least as possible. Because The more you do it, you get fatigued, you get greedy, and all these things. You let all these things in, and they break up the routine. Okay, so we need to go and sort of, in our plan, work out what sort of amount of trades we require, blah, blah. And we want to get to the lowest numbers per week to achieve it. And then we want to go and actually do it in real life. And we start with smaller lot sizes. And then as we get confident and we find that it actually works exactly the way it's supposed to, then we can slowly increase the size, keep doing the routine. And by the end of 6 or 8 weeks, you'll find that you're getting into a decent lot size, appropriate to your account size, and you'll have your routine and a good habit. Okay, so yeah. So your chart should look like my chart. And if you don't, just take a screenshot, post it, and I'll check it out for you. Okay, so you do have all the tools, and quickest way is to ask me questions post. Slow way is to keep it to yourself because you feel foolish, this, that, and the other, and take another couple of years to arrive at something that you want now. 2020, this is your year. Okay, it's all our years, so let's go. Have a great night, and see you next week. Thank you all.